Let's talk about two chip stocks that should be on your buy list or maybe watch list for now. Now this here on the screen is the semiconductor value chain. You've got companies in the equipment, raw materials, foundry, fabless designs, IDM or integrated device manufacturers such as Samsung, Micron, Intel. Then in fabless design, you've got Qualcomm, Nvidia, AMD, Broadcom, etc. In design IP, you've got ARM. In equipment, of course, you have ASML, Lam Research, Applied Materials, some others there as well. So basically, this is the whole semiconductor ecosystem. Now, in that semiconductor ecosystem, there is one part that is quite extremely cyclical, but that's the memory side of things. Now, I'm talking about memory, so you probably already know which name I'm going to mention in this video. Of course, it's Micron. Now, in the memory side of things, you've got three big players. You've got, of course, Micron, which is the gray part right here. You've got SK Hynix, which is this part right here. And then you've got Samsung, which is basically the biggest player in that market. Now, if we look at the memory industry, it's expected to be as big as $175 billion in 2024, growing extremely fast year over year, and is expected to be over $200 billion in 2025 and closer to $300 billion by 2026, and then dropping off. Why is that? Well, I just said this is an extremely cyclical, business to be in, as I'll show you in just a second. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. Yes, Micron is reporting earnings this week, so we're definitely going to cover that. And yes, it also will be taken into consideration when talking about Micron throughout this video. Now, if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So Micron, this is basically what you get, what you're buying here, a highly cyclical business. So you've got here total revenue, free cash flow, and gross profit, all the way back since Q4 of 2016. As you can see, it goes through cycles, grows up, goes down, goes back up, goes back down. Now in this case, because of the heavy investments that they're making, HBM, of course, the all new AI cycle, free cash flow right now has gone negative, but is improving, still is negative, but gross profit is a little bit better right now. Revenue is also on its way up. Of course, all of these are in the last 12 months, just so visually you can see the cycles happening. Now, when is it the best time, let's say, to buy these types of companies? Of course, not at the tops, right? But usually at the top, that's when most folks are bullish because, oh, look at this, revenue has increased by so much, gross profit is up by so much, margins are up, free cash flow is up. So everybody is extremely positive here. Very few are positive here when revenue has come down drastically, when gross profit is gone, when free cash flow is gone, when margins are done. Then investors are like, oh, why would you buy Micron or any other companies that goes through these types of cycles? Well, that's exactly when you want to be buying these types of companies. Of course, you can never time the bottom, right? So maybe you bought a little bit here, maybe you bought a little bit here, maybe then you bought a little bit here. But does it matter if you bought in this range? If eventually, again, we don't know, but if it goes back up and we go into the up cycle, and in this case, I do think that the cycle will be a little bit longer because everything will be changed. Everything has changed, let's say, in the last 2 years because of AI, because of data center build-outs, infrastructure changes, etc., etc. I do think that we're going into a longer cycle. So it doesn't really matter if you can't time the bottom perfectly. What does matter is that you don't get screwed at the top. Continuing here more on Micron's specific financial segments here. Here again, we've seen that memory has gone through a down cycle, right? As you can see here since Q2 2022. Again, this is last 12 months, so you actually see the full effect of all of it. So the blue line here is compute and networking. That's the biggest segment for them. Then you've got mobile, which is the orange one. Storage is the purple one, and embedded is the green one. All of those segments, well, I believe all of those segments have started to go back up. Now, Micron can be basically looked at in two segments. One, DRAM, the other one is NAND. DRAM is, of course, the biggest segment for them, and you've seen the recovery there. For NAND, the recovery is seen as well, but a little bit slower. We also had a couple of analyst comments more recently. So, Micron Technology is scheduled to release its fourth quarter and full year fiscal 2024 results next Wednesday, upcoming Wednesday, prompting Citi Research to slightly lower the estimates due to an inventory build of DRAM. This is basically what we've been hearing from a couple of analysts in the last couple of weeks, which has put some pressure on the stock. The analyst says, while it appears there has been an inventory build in DRAM in the PC and handset end markets, we believe this should finish by the end of the year. More importantly, we expect Micron revenue and gross margins to increase for the next several quarters. For the fourth quarter, Citi expects Micron to report earnings per share of 89 cents and revenue of $7.5 billion. These estimates are below the consensus, which expects earnings per share of $1.11 on revenue of $7.65 billion, which would represent quarter-over-quarter growth of 12%. Citi slightly lowered its full year 2024 sales estimates for Micron to $24.9 billion, down from $25.1 billion. However, the analyst does reiterate buy rating on the stock, but lowered its price target from $175 to $150, which is still more than 50% upside from the price we're at today. Another analyst said the following: we believe HBM demand is intact and calls for oversupply next year are unsubstantiated. Yet, what is clear is that consumer electronics sell-through and, more importantly, mix has underwhelmed. In our view, this may create a lull in the market over the next few quarters, with memory suppliers reluctant to accept the trade-off of higher bit shipments in exchange for lower prices. The analyst maintained his buy rating but lowered his price target to $135 from $165 on the back of the lower estimates for the fiscal first and second quarters. As for Rosenblatt, they expect Micron to deliver inline August quarter results on continued recovery memory dynamics. However, the sequential outlook likely incorporates mixed non-AI PC and smartphone residual inventory issues in the market, leading to near-term ASP pressure. We are adjusting fiscal year 25 estimates accordingly to frame a 2-quarter delay in the non-AI recovery, which does not change the AI, HBM, and accelerated compute memory cycle element of the Micron story at all. We anticipate management to reaffirm the forward 2025 view of supply-demand imbalance, a view that we consider fundamental to our buy thesis. This view is particularly significant amid the largest memory cycle we have observed. Note that AI compute in any incarnation does not scale without concurrent memory increases, bits and speed. We believe the current view of the DRAM cycle as entering a down cycle is a Micron buying opportunity. We reiterate the buy rating and a $225 price target based on a mid-teens PE multiple of our new fiscal year 26 $16.50 non-GAAP EPS estimate. So, that's quite higher than the price we're at today. Now, going back to a couple of comments from Micron, we will have substantial revenue records in 2025 and, of course, robust profitability in 2025, as well as versus 2024. As we have just shown you, free cash flow, stuff like that, will be much, much better in 2025. We've said that in our fiscal 2024, we will be shipping several $100 million of HBM revenue. And again, that fiscal year 2024 ends tomorrow, which is basically why they're going to report on Wednesday. And for fiscal 2025, we have set multiple billions of dollars of revenue. So our trajectory of HBM is strong. And we have also said that we are sold out with our HBM capacity in 2024 as well as in 2025. In calendar year 2025, sometime in calendar year 2025, we expect to be reaching our share of HBM to be in line with our DRAM share, which is in the low 20s. Again, if you get the same comments in the upcoming earnings call, plus maybe some more positive commentary as well, I think the stock will react positively, even if, let's say, the numbers come in line with expectation and not really beating it by quite a lot. Now, by the way, right now, Micron is basically down over 30% in the last 3 months, has a market cap of $103 billion and a forward PE of 13.2 times. So definitely not that expensive, especially not for a company that is expected to grow quite fast in the next coming fiscal years, right? in fiscal year 2025, sales growth of 50%, EPS growing over 600%. In fiscal year 2026, sales growth of another 16.27%, and EPS growing 34.5%, reaching $12.16. So yeah, maybe in the short term, a quarter or two, we are going to see a little bit of weakness if that's the case, right? But if not under $100, I do think that Micron could be a steal. Of course, if you don't want to risk it, then wait until Wednesday when you get the report, when you get commentary from management, and then make your move. Of course, you might miss that big move on the upside if the numbers are great, if the commentary on the call are even better, then yes, of course, the stock can jump 10, 15, even maybe 20% or so. But if not, then you might get an opportunity to buy even more shares of Micron, despite their 2025 targets not really changing much. So it's really up to you what you want to do. Maybe you open a tiny position right now. If it goes up, great, that position is now up. And then you can buy more after the earnings call. And if not, it goes down and you still have time to try and allocate and build out a better position over time with more information. So that's Micron, that's stock number one. Stock number two is, I think, a pretty under the radar company. Maybe you might have heard of it, maybe not, but I'll explain why it's on the list. The company is called Nvidia. I don't know if you've heard about it, but yeah, it's a $2.8 trillion company. Of course, I'm joking here. If you're new here, this is me joking, not being serious. This is Nvidia. Nvidia, by the way, in the last 3 months is actually down 8.13%. Yes, the almighty Nvidia, despite most of the markets being up, Nvidia is down 8.13% in the last 3 months. But I mean, year to date, it's still up 134%. Year over year, it's up close to 180%. In the last 3 years, it's up 430%. So, I mean, can you complain? No, not really. It's still expected to grow quite fast. But of course, as they become bigger and bigger, don't expect it to continue to grow 40% year over year, top and bottom lines or something like that. No. But I do still think there is some momentum with Nvidia's business more specifically. And actually, if we look at forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth, it's not really that crazy right now, despite its huge growth. Forward PE, 34.4 times, still lower than the 5-year mean, which was at 42.5 times. EV to EBITDA, same story there. Price to sales, yes, I think it's one of the most expensive names out there. I think Palantir is more expensive, but this now 18.8 times compared to 17.1 times. Price to free cash flow, 61 times, but price earnings to growth is still under 1. So yeah, this company, the stock might have gone up a lot, but the business has grown so fast as well, and that's why you're seeing these forward multiples not being, well, out of this world. They're not the cheapest one out there, no, far from it, but it's definitely not the most expensive ones either. And so with Nvidia, we've got here a comment from Bernstein: data center revenues into Q4 look strong. Data center revenue into Q4 looks strong when asked if they would indeed grow Blackwell by $3 billion in Q4. Colette clarified that they said several billion, not 3, so could be more than that, could be less. And she also suggested Hopper could grow quarter over quarter in Q4 in the context of the products growing half over half. We know that Bloomberg consensus currently has Nvidia data center revenue growing around $3.8 billion quarter over quarter, and we would hence not be surprised to see upside here. Now, if we look at Nvidia's data center revenue in the last couple of quarters and years, it's the orange line. You can see, of course, huge explosion. I mean, since Q3 2020, it has gone up by 1,319%. Free cash flow has gone up by over 1,000%. And then you've got the other segment, the second largest segment, which is the gaming revenue, that has been lagging a little bit. There has been some weakness in that market, not just for Nvidia, but for the rest of the industry as well. That has grown by 66.5% since Q3 of 2020. But of course, when you buy Nvidia, it's basically a GPU, a data center, AI buy. A small reminder for those that don't remember or missed last quarter's results, a beat across the board, couple of misses here, small misses. Professional visualization missed by 0.2%, automotive and robotics by 1.1%, free cash flow by 0.6%, and that's about it. All the rest were beats, even guidance was a beat, but that was not enough to keep the stock from falling. Actually, at the start of September, the stock was back closer to $100. At the start of August, of course, it went under $100, but yeah, I do think that for those of you that always wanted to have Nvidia or maybe wanted to add to your position, I think that around $110, $115 or so, yeah, Nvidia is still very, very strong. And as long as that momentum continues, as long as we keep hearing management talk about, well, next quarter, next year, ramping up production, and as long as we keep on hearing that, well, their clients, Meta, Microsoft, all the others, keep on spending billions of billions on GPUs, on data center, on infrastructure. As long as that continues, I don't see how Nvidia does not continue to grow, and I don't see how Nvidia is not an attractive buy when the stock goes down, which is why it's on this list, despite it being up so much year to date, year over year, or in the last 3 years. So that's about it for me in this video. Of course, do share your thoughts on Micron, on Nvidia right now. Micron going into the earnings report. Of course, good comments will definitely be well received for the overall sector. So Nvidia could go up on good results from Micron, could go down on bad results as well. Do share your thoughts down in the comment section below. Like, subscribe, do all of that. And I see you all in the next one. Bye-bye.